The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
For over 95 years, we've set the bar. Power, we restored it. Protection, we reinvented it. Record yields, we redefined it. If there's one thing we know at FS, it's that just because something hasn't been done, doesn't mean it can't be done. We're never satisfied unless we take your farming operation to the next level. Run your equipment at peak efficiency and bust the bins this season. Visit fssystem.com.
Well, as the markets wrapped up on Wednesday ahead of Thanksgiving Thursday and a shortened trading session on Friday, we saw some volatility in the markets. Soybeans ended up having a down day, while wheat and corn were relatively mixed. There was some quiet trade thrown in around a little bit of volatility as well. We want to talk about the markets here as we work our way through the holiday. Always an interesting week in the trade. Joining us now for market analysis, Mike Zuzolo with Global Commodity Analytics. And Mike, happy Thanksgiving to you and your family, and appreciate you joining us here as we recap Wednesday's market action. And as I kind of alluded to, outside of soybeans, everything else was somewhat quiet, but it's just kind of that pre-holiday type trading where you don't necessarily know everything that's going to happen in front of a holiday, Mike.
No, that's a great way to kind of queue up today's trade in terms of pre-Thanksgiving holiday trade, really all week. And I think it's going to continue all the way into when we open Christmas presents, Jesse. It just feels like that type of a year this year because we're seeing such big news headline drivers that are moving these markets back and forth so dramatically on pretty decent volume, I might add. And I think this is where today in Wednesday's trade, you're right, we saw the longs liquidate. The title of my blog post today is going to be Longs Liquidate, led by soy and crude oil. And it really was headline news that drove those two, I think. And the crude oil specifically, OPEC Plus decided to push back their meeting from this weekend to next weekend. That takes you pretty much out of the market if you're a long in crude oil in the crude oil heading into this weekend. Why would you want to keep a long position, especially if you were up some on it, if you weren't going to get any kind of volatility to the upside potential because you're not getting fresh news? We also saw the Israel-Hamas ceasefire take hold. That too was very heavily laden upon the idea, why be long crude oil going into this weekend and the holiday? And this takes you back to the soybean oil and the vegetable oil market, which has been so sensitive for the most part to the WTI market. And then you throw on top of that an ADM CEO, I can't remember if he was in South America or where exactly, talking about Brazil could still have a big crop. Well, let's frame this out a little bit, especially with Agrural. I think it was coming out saying they're still at around 162 million metric tons. The 3 and 4 year average Brazil production is around 135 million metric tons. We're, almost 30 million metric tons heavy versus what our average is. So again, why wouldn't the soybean long take profit when he gets headlines like that? So we're really getting pushed around by news headlines. Not much has changed when it comes to weather. And I think that thaw that you and I talked about at the NAFB last week between the United States and China, I think it's taken hold.
Yeah, and that's a great thought. You see soybeans down 15 to 20 on Wednesday's trade. Well, here you go, China. Here's a Black Friday sale on U.S. soybeans. I think you said it before we went on, buy one cargo, get one free, essentially, here with a downturn in the beans on Wednesday. But to your point, it just felt like, a lot of fund traders did not want to be long with some of the weather unknowns and those news headlines out there enough to kind of push us down here and then just let traders reassess things. I know we got a shortened session Friday, but more than likely probably even Sunday night into Monday as we come back at things here next week, Mike.
Yeah, I think so. And I think it's usually on Saturday, Sunday, early Monday morning. We get a lot of South American fundamental drops as far as news, as far as planting, as far as what producers down there are
Yep.
saying. South American consultants are a lot more, I think, active during the weekend. And this all goes back to the give and take and this volatility. And I would go back to the crude oil market and go back to the wheat market as well, and bring those back into from the fray when it comes to the soy complex. We've lost the ability for the soybeans to have the corn and wheat to join it to the upside. So another common theme in 2023, soybeans can go so far, but then that rubber band gets too extended. Beans kind of look over their shoulder and say, hey, you guys coming? Well, they did on Wednesday. We saw soft red wheat sales to China, U.S. soft red wheat sales to China, and then corn sales to unknown and to Taiwan. And I think even South Korea's NOFI came in and got some corn bought as well. And so we are seeing the feed grains pick up the demand, but that was kind of lost in translation with all these headlines surrounding this idea that the market's got too many longs in it and the demand is not as strong as what the supply side looks like right now.
You watch a lot in terms of the cash soybean price, and walk us through this chart on the video feed as we look at this along with soy futures. So, what are you seeing here as we work our way towards and through the holiday, Mike?
Yeah, you're right, and this is especially important, even though we don't have the Brazil or Argentine, prices on this chart. We really got to be careful about Argentina with this new president and him talking about dollarization, and whether that really opens up the floodgates from Argentine farmers. If they have old crop corn and beans, will they let it go because they've been using those commodities as an inflation hedge, given that Argentine peso is essentially worthless? But on this chart, you're seeing a divergence. I think it's going to be important next week. This is a kind of following up and putting a more of a finer point on what you just rightfully said about next week's trade in the cash market. We're getting ready for December corn to go into first notice day. And I think my basic mindset, Jesse, is that South American weather really doesn't start until Thanksgiving. So now we're really getting ready to start the weather market, in my opinion. And you're seeing a divergence between the cash beans at the Gulf of Mexico. This, even though the lower Mississippi River is going back down. And so they're still bidding up down there at NOLA, and at the Pacific Northwest, it's another 10, 15 cents higher than this price. And so we're really, really seeing the cash market go higher in the last week and a half, while the lead month futures has decidedly taken another turn in an opposite turn to the downside. So I think there's going to be a winner and a loser here. And what I would say to clients and what I'll say to them this weekend is very simple. The cash market takes the lead month above that 1377 September high on a closing basis. I consider that a breakout. You can see that on the right-hand side scale, that 1380 level. You get above that level on a closing basis, and you really don't have a lot of resistance until you get into the low mid 14s on that. That'd be your yellowish orange line chart there.
You and I talk a lot about the Bloomberg Commodity Index. Let's take a look at that as well as we head into the holiday. Any big notes you are seeing there, Mike?
Yes, I am. And this goes back to the wheat market, keeping us near that 40 level, that major support you and I, right, like you say, have rightfully talked about a lot. We saw the Argentine wheat kind of die in terms of its wheat weather-led rally, but we're seeing the Ukrainian and Russia prices really pick it up. Both of them up around $15, $20 a ton on the last 2 weeks trade. And this goes to the idea that not only did we see that big port strike hit by the Russians onto Odessa on Tuesday, but the numbers that Ukraine Ag Ministry is showing us, marketing year to date, wheat exports, corn exports for 23-24, both of them right around 5.5 million tons apiece. That's going to be down about 1 million tons on wheat and down 60%, almost 60% on the corn. So I still think this market wants to try and go higher and break higher and give us a buy signal. As I said in copy this past weekend, between the U.S. China meeting between the two leaders and the Federal Reserve getting more neutral in their mindset, I'm just essentially waiting on those bond yields to break lower. And I'm pretty optimistic about the chances for this market to catch at this stage of the game. And that's where the holidays are really, really important, because they send a lot of crazy signals typically.
Well, we are being joined today by Mike Zuzolo from Global Commodity Analytics as we recap Wednesday's trade action and look at this market as we work through the Thanksgiving holiday period. Mike, you brought up a great point about first notice day for December futures, options expiration Friday, first notice day Monday. And I know typically a lot of folks tend to hold some sort of position in December futures, whether it's corn or wheat contracts. And it always can be a pretty volatile time frame with a lot of open interest out there. And I haven't looked at it, but just can you talk about that a little bit? Maybe some reminders for folks to make sure they take a look at things before we hit first notice day.
Yeah, I mean, this is a big deal, I think, this year, especially, Jesse, because in the the project that the Chicago Mercantile Exchange has in the delivery time period is the Chicago futures price, and the nearby cash prices around Chicago need to come together. And that's where the delivery becomes so important, because it's seller's option when it comes to delivery. So that means if you're holding corn and you see that the board price is better than your cash price, you would expect a lot of deliveries. Well, that's pretty much where we're at, especially given the wet corn, the elevators shutting down a lot near Chicago. I've heard pretty bad horror stories where clients are telling me they're down around 410, 415, 420 in some cases for cash corn. The board price closed Wednesday around 470, 475. So why wouldn't the sellers out there go after the board price if they were a larger commercial that can take on the kind of money it takes to do the delivery process? And so I think the delivery process is going to be extra important. It's probably one of the last things that I could see hurting the corn market in terms of heavy deliveries, pushing futures down. But at the same time, if Mato Grosso's weather is really still very, very dry, that second crop corn potential on production is going to be cut dramatically in the course of the delivery period of the December futures, because it's such a key time period to get the beans in to get ready for the second crop corn. And so Wednesday, you and I were joking before we went on air, and I was saying, oh, all those guys that we heard about that aren't planting second crop corn because they're not going to get their first crop beans in, they must have changed their minds. They must be planning now in Mato Grosso. So something's got to give, in other words. And I think it's going to be, as you say, an extremely violent, potentially volatile market with that delivery in the corn. When it's all said and done, if we start weaker in Dees corn on delivery, I think it could be like November beans if that weather in South America holds up, where Dees corn could be like Nov beans and pulls the whole market higher into expiration. It's something to watch for.
Fantastic summation of that and analysis of that. Appreciate it. I'm sure a lot of folks will as well. All right, let's move over to livestock and let's talk cattle here. The DS Live Cattle continuation chart. We got that up on the video feed. This cattle market kind of settled up on Wednesday, a little bit lower, not by a lot, but just a little bit. What's your take in this cattle trade here as we're entering the Thanksgiving period?
I felt like the cattle and feed report was neutral enough that it didn't feed the bear, but because we still have almost 12 million head on feed right now, it wasn't going to feed the bull either and give us a recovery. And we did take a shot one day on Monday to try and get back above the October low in December fat cattle, that 177.30 level. That's where the orange circle is on that bar that pokes down from October. We could not stay above that level on a closing basis, and we went right back down to the low end of the trading range. I'm inclined to think the technicals and the cattle on feed were traded this week, Jesse. We didn't see any cash trade really develop as well. Next week, though, I think we've got several things going for us. The USDA retail numbers from last Friday on beef, the rib data, both steaks and roasts, were up 325% on the featuring ad space versus the prior week. We typically peak in dressed weights at the end of November for the cattle. The slaughter numbers usually see a lot lower dressed weights as we get into December. And then we've got a snow coming into Garden City, into south of Hutchinson and west of Hutchinson. It's right in the feedlot country. And so I'm wondering whether we don't find a little bit better support. And obviously, the big question mark remains consumption.
Yeah, consumption remains a big key in my mind as well. As we enter Christmas, how many prime ribs are we going to see, et cetera? Yeah, that's going to be a big thing here too, and really getting through the rest of this year and into 24 as we wait to see if this herd's going to get rebuilt or started or not. I think that's going to be a big key for us here, Mike, as we move through the holiday season. Consumption and whether or not there's any inkling that we could start to rebuild this herd.
Yeah, I think that's an excellent point. And that's where the snow maybe comes in between the rains last weekend and the snows coming in this week. The next week, we might see some talk about calves being put down and picking up in Oklahoma City, especially. I'm going to be watching that closely. That chart also showed a gap at about 183.50 in the D's fat cattle, Jesse. That's a number I think is still attainable because I think that's where the cash price should be at as we get into the fourth quarter. USDA is even higher than that. I think their November numbers were 185, if I remember right, when it comes to Q4 for steer prices. Your consumption comment really caught my attention because you had Walmart, Best Buy, who was it, Lowe's, and I think Kohl's come out and say, we're starting to see some hiccups in the demand and consumption side here. I'm not so sure that didn't translate into the meat market, even though it didn't really get into the stock market this past week. But as I said, I'm going to stick by the favorable consumption pattern for the Christmas season on beef, just because I think we're kind of hammed out at this point of the last 2 years of buy a turkey, get a free ham. And the roast prices, like I said, they're really, really competitive compared to the last 3 years.
Excellent point. Speaking of ham, speaking of hogs, a little bit lower on Wednesday into the Thanksgiving holiday. This hog market to me still feels like it's searching for solid footing. And really, if it has found a bottom, we're not really doing anything to work our way off of it here, it seems, Mike.
I agree. And, we had a USDA attaché report at the end of October, early November that said, look, sows in China, we're going to be down about 1%, steady decline in the sow inventory. And then China came out, Ministry of Agriculture, at the beginning of this week and said 42 million head of sows, too many. We got to cull more. And I think it's kind of like the soybean weather market. And this is where that pork and bean trade is so valuable to me. We're getting mixed signals when it comes to what's going on in China with the hog market. So I'm going to lay back and say we're in a trading range market at this point. We've done most of the damage to the downside. The cash index is way above the futures price right now. And let's wait for the D's Hogs and Pigs report to give us more of a direction on our supply here in this country and stop playing so much on China's market.
Mike, great stuff as always. As we wrap it up here and head into the Thanksgiving holiday, anything final you would reiterate for folks here today?
No, just back at you on the Thanksgiving blessings to you, your family, and all the great listeners and viewers on the Market Talk.
Fantastic. And I know if folks want to take a look at your analysis and reach out with questions and comments, I know they could do that very easily. How can they get a hold of you, Mike?
Yeah, and I welcome that because a lot of people give me as much information as I give them, especially in the cattle industry and what's happening with the corn harvest finishing up. So give me a shout out at globalcomresearch.com. Sign up for a trial. Pose a question to me in the comments, or if you want me to call, just say, call me Mike.
Fantastic. Well, Mike Zuzolo, Global Commodity Analytics, have a happy Thanksgiving. Thank you for joining us on Market Talk, sir, and we will talk to you next week.
You bet, Jesse. Thank you.
Mike Zuzolo there with Global Commodity Analytics. Again, find him online, globalcomresearch.com. That's going to do it for Market Talk. Happy Thanksgiving. I'm Jesse Allen.